After 7 years of trading, my first candle strategy was the simplest way to become profitable. This incredibly simple strategy helped increase my win rate, get sniper entries on trades, and get rid of thousands of confusing strategies and concepts that you've already seen. The best part is it only uses one candle, so even a complete beginner can master it. In this video, I'll teach you how I trade for about 90 minutes a day using a simple 3-step system you need to execute this strategy, and then I'll backtest this strategy every single day so you can see real results of only trading this one simple strategy. So in this video, I'm going to share my first candle 1-minute scalping strategy. And not only is this strategy simple, reliable, but it is the same strategy that I've been using for the last 7 years. And going into 2026, which is a new year, I will continue to use this strategy because it has given me results like this, and this using this one simple strategy that requires 3 simple steps to execute, which I will teach you in this video. And then once I show you how to use the strategy, I will show you real examples on the real charts. And this way, by the end of the video, you'll not only understand the 3 simple steps I use to identify high probability setups, but going into the new year, you'll understand how I'm able to identify these high probability setups and execute using a simple system. Now, with this being said, this is the same strategy that's allowed me to have results like this. In this last month, I had about a 70% win rate and an 88% daily win rate. This is my exact P&L calendar. I had 2 days where I lost. However, the rest of the month, you can see I only took 1 or 2 trades. Now, the most important part of all my videos is it took me 7 years to get results like this. Trading is not a get-rich-quick business. However, we can simplify trading. And this is exactly why the goal of this video is I will teach you my full trading system and exactly how I look to identify trades in about 90 minutes a day. And this way, by the end of the video, you'll learn one trading strategy that is not only repeatable, but also mechanical, systematic, and simple. So the problem with most traders is their charts look like this, where they'll have a lot of different indicators, a bias, key levels, and it's just too confusing. The best part about this strategy is it doesn't require bias, fancy indicators, and it sets up every day. So instead of your chart looking like this, where it's just too confusing, we want to completely get rid of the confusion and make trading simple. And therefore, in this video, what I'm going to be teaching you is the 3 simple steps that I use on a daily basis. First, we will start with the foundation, and you need to master this to learn the overall strategy. Then I will go over the simple setup that I trade on a consistent basis, and you need to learn this in 2026 if you want to simplify your trading. And then I'll show you how I execute high probability setups. And then near the end of the video, I'm going to be showing you real examples so you can truly see how this system works. What we want to do for this strategy is focus on the first candle of the day. It is extremely simple. The first candle of the day will give us more information and will completely filter out the noise and complicated strategies that other traders may trade. The point of the first candle is to give us a clear direction of the market. We want to let the first candle form, and then we only have one question, and that is, which way will the market trend? Does the market want to go higher, or does the market want to go lower? If we can understand if the market wants to go higher or lower, this will not only give us an edge in the markets, but we can use that to our advantage to take high probability trades. And of course, after that, we need to focus in on our entry, a clear and repeatable stop loss, along with the profit target that we can use on a consistent trade by trade basis. And once again, this is a trade that I took using this strategy. I will be showing you the back-tested results for this strategy at the end of the video. So make sure you stay tuned for that. So therefore, you can see how the results of this strategy were and what we can do to increase the win rate of this strategy, especially going into 2026. But the key here is this strategy revolves around one saying, which is simplicity equals profitability. The reason most traders fail is because they have complicated strategies, they use too many indicators, or they just have analysis paralysis, where they'll see a very simple trade setting up here, but because they overthink the trade, they never get in, and they see the full move happening, but they never got into the trade. So even though they had the right idea and thesis, they weren't able to execute. And in this video, once you learn the strategy and how simple it is, you'll see how we can eliminate all 3 of these factors. Like I said, we want to focus on the first candle of the day. This is going to be the 9:30 a.m. Eastern candle. For me, I trade the New York Stock Exchange Open, and therefore for me, I'm focusing in on the first 5-minute candle of the day. Now, this strategy works on futures, stocks, options, crypto, and Forex. Therefore, no matter what instrument you're trading, you want to mark out the first 5-minute candle at 9:30 a.m. Eastern. And to mark out this candle, all we're going to do is mark out the high and low. Here we can see the high of the 5-minute and the low. These are the only key levels we need to identify the high probability setup. Once we've identified both the 5-minute high and the 5-minute low, the next step is to go over to the 1-minute time frame. This gives us a little bit more information on the stock compared to the 5-minute, because on the 1-minute we have multiple different candles showing us both bullish price action and potentially even bearish price action. And all we want to do is wait for the stock to break either the 5-minute high or the 5-minute low. In this example, if we break above the 5-minute high, we can expect the price to continue in that direction. If we break below the 5-minute low, we can expect the price to continue lower below the 5-minute low. And as we can see here, for this example, we actually broke back above the 5-minute high. This shows that there are strong buyers stepping up above the 5-minute high, and this gives me more confidence that I should be looking for a long position or for a buy position to the upside. Now, another factor that we can add for even higher probability entries is going to be a bullish gap or a fair value gap. In this example here, we can see we have the 5-minute high, but once we break above, we can look for a bullish gap. A bullish gap is simply an area where price moves very quickly out of. So when we do come back for a retest, this is where we would want buyers to step in for that move back to the upside. Now, don't worry if you don't understand the bullish gap just yet. When I get into the real examples on the real chart, this will make much more sense. Now, in this example here, you can see we broke above on this name. We're now coming back for the retest of the 5-minute high, and this is where we want to enter. However, the problem is, and this is where a lot of traders end up failing, is we don't just want to buy because we're coming back for the retest of the 5-minute high. This would be a little bit too aggressive, and this is why a lot of traders fail. They see the retest of the first candle strategy, and they simply think if they enter in here, they're going to ride the trade back to the upside. Well, in reality, if you entered in on that candle, you would have gotten stopped out instantly and lost this trade because you didn't wait for one missing piece that a lot of traders fail to wait for. And that's going to be waiting for strong price action. We need to wait for buyers to step in on the name. So in this example, when we got the 5-minute breakout, when we came back for the retest, we didn't just enter in on the first retest candle. We waited for buyers to step up and show that they are stronger. Now, this candle here is one of my favorite candles. You can see the body of the candle and the wick. All this simply means is at one point, this was a red candle to the downside, meaning this was a full body candle and sellers were very aggressive on this candle. However, what happened is at this 5-minute high, buyers then started to step in. And therefore, rather than closing as a red candle, we closed as a very bullish candle, and we had a wick which shows that buyers overpowered sellers at this area. Therefore, we waited for that strong price action, and this is now where we want to enter. And as we can see here, we enter when we see that strong price action. Our targets will be high of day or a 2R multiple, and our stop loss is simply going to be a break below the structure. Now that I've shown you the full strategy, the 3 steps on how to execute this strategy, let's go over to the real charts where I'm going to be showing you live examples. So by the end of the video, you can see how I implement this and how I will make it even better for 2026. Okay, here we are on our first example. We're on the 5-minute time frame. Like I said, I'm going to be backtesting this and showing you the full results at the end of this video. So you will see exactly what happens if you only trade this one strategy. But like I said, we're on the 5-minute time frame. So let's play out the first candle. And here we can see that first candle forming. So we're going to mark out the low of that first candle, and we will mark out the high of the first candle. Now we can go to the 1-minute time frame. And on the 1-minute time frame now, we're simply waiting for a break above and a retest of either direction. So either a break to the upside or we're looking for a break to the downside. Let's see which way this stock moves. Here we did get this break to the downside. However, as we can see, when we're coming for the retest, you can see that sellers did try to step up, but we did not get a candle closure below the 5-minute low. It is very important that we get a candle closure below the 5-minute low to take a trade. Same with the upside. We need a candle closure above the 5-minute high. Therefore, there is no entry to the downside even though we broke below. Let's see if we can get a potential entry to the upside now if we break above. But so far in this day, there is no entry just yet. And here we can see we are now breaking back above that 5-minute high, and we came back for the retest. Let's make sure that this is a proper retest. We got a break above the 5-minute high. We are now retesting. We have strong price action because we see these lower wicks coming into this level, and buyers are still defending this level. And on top of that, we went from low of day to high of day, showing that the stock is indeed bullish. This is the first trade we will take. We will look to go long on this position here. Our stop loss can simply be a stop below this down close candle over here, and our profit target needs to be at least a 2-hour multiple. In this example, we can simply target that 256.50 level. We're risking about $1,160 for about $2,460 in potential gain, and let's see exactly what happens with this trade. And just like that, we can see on the very first trade we took for this backtesting session, we won this trade by simply understanding this first candle strategy. Now, this was the first trade. We're going to be doing many trades, so you can watch this video again and look at all the different examples I show you. And on top of that, I'm going to be showing you the full results at the end of this video, but let's go over to the next example. Okay, here we are on the second example. Once again, we want to let the first 5 minutes of the day play out. Once we have the first 5 minutes, we can simply mark the high and the low, and now we are looking for the exact same thing. We're simply looking for the market to break above or break below, and then we will look for a trade. In this example here, we can actually see something that happened that we want to take note of. At this 5-minute high, we got this very impulsive candle. This impulsive candle put in a bullish gap. If you don't know what a bullish gap is, I have a full in-depth video going over the bullish gap and exactly how to use it. That video will be on screen now that you can watch after this video. It will also be in the link in the description. But essentially, a bullish gap occurs when you have a big gap in between candle A, B, and C. So here we have candle A. You can see candle A's high is right here. Candle C's low is right here. And on candle B, this gap from candle A to candle C, we can simply mark that out as a gap. This shows that price moved very quickly off of this level, and therefore this is where buyers would be stepping in. So we can combine this with the first candle strategy, and this will give us a high probability entry model as well. As we can see here, the first candle strategy plus that bullish gap, buyers stepped in very nicely and aggressively off of that level. So we can look to go long here with our stop loss at the break of the first candle strategy, and we need at least a 2-hour multiple. In this example, we can target out that 248 whole psychological number. And on this trade, we're risking about $2,190 for about $4,850 of profit. Let's see exactly what happens. And we can see this trade worked out very nicely and got all the way up into our profit target, and we were able to secure our profit on the second day here as well. With this being said, let's go over to the next day. Okay, here we are on our next example. This is now day 3. We're going to play out the first 5 minutes to see exactly the type of price action we get. On the first 5 minutes, we can now mark out our 5-minute low, and we mark out our 5-minute high. We simply want to see which way the price will move now. As we can see for this example, the price is moving up, and it moved up very aggressively. This is where we can once again map out that bullish gap. In this example, that bullish gap occurred when we broke out into this candle right here. So we had a small little bullish gap right here. This is where the trade would need to essentially come back and retest on top of the first candle strategy for the move to the upside. And here we can see we're getting that entry. This candle was a little bit bearish, but on the very next candle, we do see that some buyers are stepping up, and this candle did close green. Our stop loss can simply be a break of the bullish gap, and we're looking for at least a 2-hour multiple. In this example, that 2-hour multiple will come at that 248.50 key area. We're risking about $880 for about $1,880 in potential profit. Let's see exactly what happens. And just like that, we were able to execute this very simple trade on day 3, and we were done the day within 30 minutes. Now let's go over to the next day. Okay, here we are on the next day. We're going to play out the first 5 minutes, and then based off of that, we can look to take a trade. After this first 5 minutes, we're going to mark out the high and of course the low. And once we've done this, we're simply waiting for the stock to break to one direction and give us the retest. In this example here, we can see the stock not only broke below, but there is a retest area here as well. That's going to be the bearish gap this time. In this example, you can see the bearish gap. You have the low of candle A, you have candle B where the gap occurred, and then you have the high of candle C. You can actually see we are retesting this level, but we need weak price action if we want to enter, and this is where we're getting the weak price action. So the first candle strategy helps us determine that the stock is indeed in a downtrend, and now the bearish gap is helping us confirm the entry with proper executions. Our stop loss can simply be a break of that bearish gap. In this example, for that 2-hour multiple, multiple, we're simply going to target out that 228 whole psychological number. For this trade here, we're risking about $1,460 for about $3,000 in potential gain. Let's see exactly what happens if we enter this trade. And just like that, by entering this trade, we were able to capture another high probability trade. Now remember, I am backtesting this day by day. If you look on the bottom, you will be able to see the dates and you can go backtest this yourself to see that I'm showing you real results in the real markets if you just trade this one strategy. Let's go over to day 5. Okay, here we are on the next day. We have already marked out the 5-minute high and the 5-minute low. At this point in the video, you should know how to do that. And now we are simply waiting for either a break above or a break below the 5-minute high and the 5-minute low strategy. So far, you can see a little bit more consolidation. We are near the 5-minute low, but we haven't broken below it just yet. And here's that big break of the 5-minute high. On top of this big break on the 5-minute high, we can see we actually put in that bullish gap as well. So because of this bullish gap plus the 5-minute high retest, this is going to be a good level to enter into this trade here. Our stop loss is going to be a break of that bullish gap, and we can target out that 232.10 whole psychological number. This is going to be about a 2.47 risk to reward trade, which means for $660 of risk, we're looking to make $1,540 in profit. Let's enter into the trade here and see exactly what happens. And just like that, this was once again another trade executed well by simply understanding how to use the first candle strategy in combination with the bullish gap. Let's go over to day 6. All right, here we are on the next day. We're going to let the first 5 minutes play out, and then we're simply going to mark the 5-minute low and the 5-minute high. And once again, the beauty of this strategy is we don't need a daily bias. We can simply come into the day, we don't need any indicators, and we keep everything extremely simple. Now, in this example here, this is an immediate retest. So we can see this one actually broke below, retested, and this is an immediate retest. Now for me, I typically don't like these. This is because I would like to see a clear break, a retest, and then continuation. However, technically this is a retest, it's just an immediate retest. Therefore, for transparency, I do have to take this trade because this is an immediate retest. However, in my personal trading, this is something I typically tend to avoid because for me personally, I like a little bit more of a bigger push down and then a retest. However, for this trade here, we can look for that 2R multiple with a risk above the candle that we're entering in on. For this trade, we're risking about $760 for about $2,220 in profit. And unfortunately on this trade, we actually ended up getting stopped out on the very next candle. Now, this is our first loss in this backtesting session, but remember, I'm not skipping any day. I'm backtesting the strategy every single day on the same stock. And this is why you're going to see transparent results at the end of this video. This was our first loss. Let's go over to the next day. Okay, here we are on the next day. We're going to let the first 5 minutes play out. This name overall on this specific day is a little bit more bearish. So we're going to be looking for that bearish price action. You can see here, we're already breaking below, and on this candle here, you can see we got a very, very big rejection. So this is where we can actually look to take a trade to the short side. Our stop loss is simply going to be a break back above that 5-minute low, and we need at least a 2R multiple. We can enter into a short position here, which means we're risking about $2,080 for about $3,980 in potential gain. And let's see exactly what happens. And remember, at the end of this video, I'm going to be showing you the full results of this complete strategy and everything that would happen if you executed only this one strategy. And just like that, we can see this trade worked out very nicely into our whole psychological number and our profit target. This trade was once again another win. And now let's go over to the final day. Okay, here we are on the final day. And on this day, we're simply going to do the same thing that we've been doing every single day. And that is going to be, we have to mark out the first candle rule, which is simply going to be the 5-minute high and the 5-minute low. And now we are simply looking for that break above or below. On this day, we can see we are extremely bullish. Most candles did end up closing green. So we simply just want to wait for a break and retest to occur. Now on this name, we could have taken this immediate retest here as well, but we can also take this retest here. So if you did enter here, you still would have been in this trade. If you entered here, once again, where we're entering, this is still a valid break and retest. Our stop loss is simply going to be a break below this down close candle. We need at least a 2R multiple. Let's enter into a buy position here where we're risking about $1,490 for $3,000 in potential gain. Okay, so as we can see, this one did consolidate a little bit longer than we wanted it to, but still eventually ended up hitting our profit target. So now that we've done all this backtesting, let me show you the final results of all of these days. And this way you'll be able to see the results of one simple strategy. Okay, so here are the backtested results for the strategy. You can see all the days that we did trade, which was 8 days, and you can see the total profit and loss along with the risk multiple for each trade. We did end up losing one day here on day 6, but the total results, as we can see, is a total win rate about 87%. And for the entire 8 days, if I just followed this one system, this is the total profit. Now, it's important to remember these are back-tested results. I'm not saying that tomorrow, if you go out, you can achieve these same results. It's going to take you time to learn the strategy, and trading is not a get-rich-quick business, but this is to help you understand why I believe simplicity equals profitability. Now, with this being said, if you're a new trader and want to start from absolutely scratch, make sure to click this playlist on screen now. It is a 10-hour playlist going over everything you need to learn trading. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Subscribe to the channel and follow me on Instagram and Twitter for more education, and I will see you next week with a brand new video.